Hello guys, we are going to be see short-term and long-term investing in this video, but those two type of investings which have the huge difference because not because of the investing would have completely a different way of investing. It is because we have the different goal why we need to be choose a short-term or long-term investing. So first we look at the long-term investing. Why long-term investing is why it is really needed for, and what kind of peoples is actually usable at every cost. So if your goal is to have the clean retirement, or you want to save, or you want to have a huge amount of money accumulated over term for your children's education in futures, in next 10 or 15 years, or maybe you have to build the wealth building, which means legacy building, which means building wealth over times after 15 or 20 years, but you willing to be accumulated return over term. Then the better way is to go with the long-term investing, because long-term investing is highly focused on the long-term time periods. So that's what makes completely stand out for the long-term investors. So what way we can choose to invest in the long term, which means using the equity stocks. If you are already have a huge knowledge in how to analyze the companies and how to understand the company, how you can read the financial statements and the annual reports and quarterly report, and you know how to value the company, you can choose the equity stocks, so you can analyze on your own yourself. And at the same time, you can also not only, if you don't have the huge knowledge in investing in individual stocks, you can also choose in index funds or mutual funds or any other constantly giving overall returns with a lower level of risk stocks, which give you a minimum base level of returns over times to accumulate it. But compared to the individual stocks, these index and mutual funds have the base level of lower returns. But if you know how to analyze and value the company, you can best choose the stocks where you can analyze and understand one company, and you can invest on it to rely on those specific return in the long term to accumulate over a huge wealth. But if you look at it, what is the advantage in long term investing is, we have in every way we have some advantage and disadvantage. If you look at an advantage of long term investing, is you can able to accumulate a compound return, which means if you put something like $100,000, if you double it 10 times, 100 to 2,000 to 4,000, 4,000 to $8,000, $8,000 to $16,000, $16,000 to $30,000 and 32 to 64, and 64 to 1 to 8, 1 to 8 to 512, 512 to $1 million dollars, 1 million dollars in 10 doubles in over times. Even if you started with a small amounts, if you only focus on the long term, you can able to have the compound returns, and you can able to be able to focus on. But the benefit of a long-term investing more than that is, if you hold some of the stocks for the long term and you're accumulating over time, you're not taking the amount outside of it, you can able to have a very lower level of capital gain tax. Sometimes if you hold more than 15 or 20 years, that you can able to pay zero amount of capital gain tax based on the IRS, what they are imposed on the current times. So that would be the greatest advantage. But that is also one disadvantage in long-term investing, which is time. You have to keep your lifetime of huge amount of time for accumulating those returns. You have to be very patient on to grow your money, no matter whatever it happens. So that needed to be a biggest constraint on a disadvantage in long-term investing to accumulate that huge amount of wealthy returns. So time is biggest disadvantage, and at the same time, you also your money is also completely locked into specific stocks or into the company, that you need to be patient until it's grow accumulatively based on what target you have in your mind. So the second thing we can look on it is short-term returns. So short-term returns have the different needs. So for example, if your needs is completely needed for some vacations, or something you need your money for home renovations or emergency fund or any kind of things, For example, you need some extra income like an interest on quarterly basics, on yearly basics, whatever. So that would be very fitable for the short term investing. If you focus on the long term investing, you never it will be great fit for you. So the short term investing, the best is if you're afraid of, you don't have biggest knowledge on something like real estate or stocks or whatever, well, you can put it on a saving interest bearing interest account, which will give you a huge minimum of 2 to 3% of interest per years, so that you can be able to put it on your saving account and get the decent amount of interest on the saving account. So the second thing is, you can also put it on a fixed deposit. If you put it on a fixed deposit, you get some level of returns, 5 to 8%, sometimes 7% of like a same thing. It goes to the bonds as well as for the short-term bonds, which has been issued by the governments, as well as the debit instrument, which is issued by a corporate. You can buy and hold it for the short term, so you can receive some interests on a short term period, so that you can be able to accumulate some amount of money as extra income. But some people's using some other ways. Usually I see some people's buy gold bars and silver bars with the short thing, because we could able to see within last 2 to 3 years that gold and silver and commodities, over some of the commodities, constantly growing and having the good higher growth rate, but it's also higher volatilities compared to the last of 10 or 15 years. So that is a higher risk in gold and silver as per now, because of the up and down market within a very short time frame. But the great disadvantage in short-term investing is we have a very lower level of return, which means 2 to 3%, 4%, something like that. Even if we put in an FD, something like we get 5 to 6%. But the main thing here is, if we put in a huge amount of capital for the short-term return, and if that return is higher than a certain limits, if we got a huge amount of money as accumulated money in very short time of periods, regardless of the percentage what we got, then we need to be pay a huge amount of taxes, which means ordinary level tax brackets for the IRS. So we need to be consider the current tax rate that need to be paid if we get a certain amount of interest rate above than what the IRS has been imposed on the current years. So at the same time, another one disadvantage in short-term investing is you would be you have to be very careful on short-term investing, which means if you put in some money, for example, if you got 4% returns this year, the whole year, by putting some amount of capital, and if this year inflation is the 4%, your return is completely 0%, because whatever the inflations you got is the exactly, you have to beat those specific returns, otherwise your return is equally zero. If it is not, even if your return is 3% and inflation is 5%, you only have the negative returns, and whatever your buying price is going down. So that is the complete disadvantage in short-term investing. But so you have to be thinking based on your goals and your needs. So you have to be planning clearly what kind of returns that will be perfectly fit for your lifestyles and needs, so that you can consider and put it on the short-term investing. So, but there is also some advantage in short-term investing, which means you would be protected from the market crash and sudden emergency needs of funds or anything. For example, if you focus on the long term, if you put it into the stocks or any kind of mutual funds, if you focus on the long term, if the market is crashed, you wouldn't be able to be tax the money, and you will end with the loss. So that would be the great disadvantage. But in short-term investing, you would have some advantage, which is whenever you need the funds from the FD or whatever in bonds and anything, you would be give with the less returns, but you will always take the money out of the accounts, even in the saving accounts, which yield some level of returns. So with that case, you can be able to have some amount of returns as extra income if you are planning for the vacation or home renovations, whatever some money you needed for the returns in the sideways. But don't keep anyway as a professional career as investing for, even if you're not a professional investor, if you don't have a huge level of capital for accumulated returns to make a living. So most people do their mistakes by completely relying on the very short term capital and putting on it, and relying on the interest based income. So that doesn't fulfill your living, even if it's not giving you perfect returns and inflation periods, you can enable to be make it. So that's it. So you can consider based on your needs and choose which one fit for your long term or short term investing. Thank you. I will see you in the next video. Bye.